Panda anthem.
Ian, what's up?
Red Panda anthem.
Red Panda, what's good?
Red Panda anthem.
It's your boy.
Going up.
And now we're going to see a whole bunch of layoffs. So like Klarna's laying off 10% of its workforce. Netflix laid off 150 employees, and let's say they on average made like $110,000 a year. That's $16.5 million to saving. You cannot save your way out of devastation. So whenever companies go to cost-cutting measures to try and save a company, it's usually a sign of overspending. But that 16.5 million, even on an annual basis, won't give them the edge they need when they have a pricing and a debt problem. Earlier today, somebody asked me, hey, Trap said Apple can go to 111. What do you think? And I'm like, I got 110.38 mapped off as a worst case scenario. So I know it feels like during a recession, you may have to keep averaging down, but didn't everyone want better prices? So if you're consistently focused, and I know everyone ideally wants to buy a company, let's take Apple, at $72. That is your average cost. You buy in one time, and from there it goes to $700, and you look like a genius, and you put in $200,000, and you never have to touch anything again. It doesn't look like that in real life. If you bought a quality company, if it continues to dip with great leadership, great fundamentals, a great moat, and they have indestructible forces around it that are stronger than a moat, you shouldn't care if the stock drops 25, 30, 45%. That only gives you trouble if you feel that the business that you bought into was not that good. And let's look at the bond market real quick, because this is really interesting. If we look here, the bond market is barely above. It's 50% mark. So from 5 years, 10 years, the bond market since 2020 has come down and has been cut in half. When we begin to see an uptick in the bond market, and hold on, let's even look at 10 years. So if we look at 10 years, we're really at 2013, 2014, and 2018 levels. That's how you know that the market that we were in was not a real market. It was overinflated once again. It was like Major League Baseball when steroids is going on. And this is what I always tell you. Any market that is going up really fast is going to have a fall that is incredibly sharp and volatile to the downside. So when you go through Money Master the Game, shout out to Jerry, and they're like, hey, it was a precipitous decline in the market. This is what they're talking about. But what will give you an edge to know if this can happen is studying these charts historically. So the further out that you go, that will actually give you your edge in the market to know if this could happen again. But please stop buying at a high. So if a market is up here, let's say at 191 and the all-time high is the high is 191.22 and it's at 191, you do not want to buy in this area. Leave it alone. Wait for it to pull back some. And literally, if you would have waited to that 50% mark, you would have had a little bit of a drawdown, and then you would have saw the market start to go back up in your favor as a result. Please be patient. Write in chat. I will be patient for every investment that I make, even if I love it dearly. And the biggest lesson from this weekend that I wanted to share, once again, I want to share with parents exclusively. With your kids, take 5 minutes every Friday to talk to them about investing. You do not have to read them a filing report. You do not need to watch CNBC with them for 25 minutes. 5 minutes. Apple, computer company, McDonald's, food company, Target store, Amazon store. That's how I taught Xander. When I, too, tried to be a super professor to Xander, he would look at me like, what are you talking about? And the simpler we make it, the better. And the second biggest lesson I want to share, like for those of you who are young, in your early 20s, 20 to 29, right? You have an edge that even those of my generation do not have. You have more data, more information, incredibly fearless, and you grew up on technology. So kudos to the brother. I have him on the show one day here very soon, I hope. But I had a chance to meet a brother who came to the event, and he was like, off your advice, I went from having, I'll let him tell a story, but he started with less than $20,000 in 2020 and eventually became a millionaire in 2 years off of the advice that he got just from watching Market Mondays. Like, that's amazing. That's why I tell you, sometimes the thing that stops us from getting to our goal, the only thing that is blocking us is us. And to hear what he invested in, even caught some of the prices of Doge and wrote that up and then rolled it into his business and took that advice. Like, nothing is going to stop you but you. You truly deserve this. I've talked about a bunch of stocks, and I'm going to review probably 50 before we wrap up. But I want to show you a couple things that I look at that I've never talked about before that gives me a gauge on where we are in the market. So if you look here, this chart represents the unemployment rate for the county of San Francisco. So you can see, let me scoot this over for you. So you can see the low was here in 2019. And then 2020, COVID happened, there was a change. Back to the EMA, right? So once I saw we were back underneath the EMA, things were going to stabilize. So the cities that I normally look at to get a gauge, LA, write these down, San Francisco, Houston, New York, the Mecca, right? And Miami. So if all those have pretty good employment rates, I then begin to say, okay, great, the market is going to stabilize. When we get to these top levels, same thing with support and resistance. And let me go back a little bit further. So if I go here and I'll just do a quick channel, top to bottom. Whenever it breaks out of these zones, so it did here in 2020, so it broke these highs, I knew a change was going to come. And if you look city by city, you can begin to see that when these highs are here, there's going to be a change. And just like when we get to a low, at some point, employment is going to go to the other side. So that's another way you can look at the market and see, hey, overall, if the employment is too low, at some point, there's going to be a wrench thrown into the system that throws it off. And that may give me an opportunity in the market to be able to see when there is a good time to buy and what's one of the biggest industries in San Francisco County. Please put it in chat. This one here is Consumer Price Index for all urban consumers. So in all items in the United States, this is the average. So the average right now is at a high, all-time high, 289.11. So if I go, let's go max available, and I look month by month, the CPI has increased. And if you go back and look historically, you can go back to 1913 and 1915. So when I say study a market, know the highs and lows of every market to know if CPI continues to go up, what effect does that have on a market? Quiz time. Please put that in chat. This one here is the real gross domestic product. So another quiz question. What does the gross domestic product represent? So right now, you can see in 2020, of course, it fell down, and now we're back close to a high that we were. Sliding down a little bit, but if you go, let's go out 20 years. And if you study that, you can see 2008, we had a dip. So even on these lines, for me, any of these dips, if I wanted to use this indicator alone, I will buy on these when they were red. Top 5 companies. Sometimes we make it so complicated on how to invest. It's like, no, just invest consistently. So even if we'd have invested here, 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 these two, here, 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 our average entry would have been like sub 18,000. We would have been okay. The biggest mistake that we make is not investing and looking at too many damn indicators to decide when to get into the market. And as we get close to wrapping up, I know some of you may have not liked my takes on crypto, but the takes are correct. I can't wait till Satoshi comes out of hiding and he tells you guys the truth. Tether will be next. And I understand that just because, but look, Stop moving the goalposts on me. I'll say that because last year it was no, the banks don't have majority control of the price or controlling interest, or they're not heavily invested because the banks are the competitors. Now it's like, well, we're talking about the blockchain technology. Listen, I won't say anything. I'm going to just let everybody in Red Panda run it up. That's what I'm going to do. But I will say, for those of you that are anti-crypto, and I'm not saying this to play to the crypto audience, once again, for all my financial content creators, one of the biggest mistakes you can make is to attack an asset class because the people feel that you're attacking them. Once again, I was in crypto early. Got caught up in Mt. Gox. Was in 2013. Kudos to Matt Schlitt, who told me about it, who was an employee at Facebook. I was in before most people of my hue or my hubris even knew about Bitcoin, right? And I still think once everything clears, Ripple is going to be great. So I'll say that.
This that Red Panda Anthem.
Ian, what's up?
This that Red Panda Anthem.
Red Panda, what's
This
good?
that Red Panda Anthem.
Your
Whole
boy.
clip going up. I know they can't stand it.